Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week of May, in which we have a lot of fundamentals to cover, from the PPI to CPI to a lot of Fed talking. And we are also going to cover technical analysis and the open interest in both equities, Nasdaq and S&P's futures, and also other markets like the dollar, yields, and the big squeeze higher that happened on Friday on precious metals like gold, copper, silver. And I think that's going to be super important to really understand what happened on Friday on the equities, the final sell-off on the options expirations, coupled with the fact that metals are surging, are raising concerns about inflation. So we are going to cover that also. But first, we are going to start with the economic updates during this week. On Monday, we have both Feds, Jefferson and Master, reiterating the fact that the inflation is way higher and the Fed needs to be data dependent. So basically, we need to see progress of inflation to the downside to really see cuts happening this year. On Tuesday, the first big economic data happened, and PPI month over month came higher than expected. And the same happened for the core PPI, way higher than expected. So this is, in principle, a big miss for the battle with inflation, but the numbers were revised lower from 0.2% to minus 0.1 on the PPI month over month in the previous reading. And also for the core PPI, we came from 0.2, a revised reading, to minus 0.1. So these readings were encouraging to the market, and they were not focusing so much in these higher readings, but the fact that the previous one was revised lower. That's why we saw the equities trying to climb higher on an apparently bad missed inflation reading from the producer. And Fed Cook and Fed Chair Powell said the same. Chair Powell focused on the fact that interest rate hikes are most probably out of the table, and they need to really see progress to start seeing cuts. They don't see cuts this summer, and they are always saying cuts at the end of the year. So this caused a little bit of volatility on the market, but I think the key to really understand Tuesday was the PPI revised down readings on the previous one. Finally, Wednesday. On Wednesday, we have the core PPI. Really, I think was as expected, but services came higher than expected. And I think the key to really understand what is happening with the sticky inflation, it's actually the services. Everything is pointing towards sticky inflation on the services side of inflation, and that's affecting the sentiment. Also, housing and labor market are still super strong. So I think the sentiment overall it was not good, but also not bad. It was basically as expected. A little bit of beat, meaning a little bit of downtick in the month over month, on also on the year over year on the general inflation, but the core PPI came as expected. If you want detailed analysis on the report, you can check my video on Wednesday, in which I cover in detail all the services from the Bureau of Labor Statistics in the report. On Thursday, building permits, basically housing market data, and it came a little bit more cooler than expected. 1.4 on the building permits, minus 3 on the month over month preliminary, and housing starts also lower than expected, and an uptick in the starts month over month. So really mixed sentiment. So we were expecting maybe that the data on the housing sector was cooling down, but no, we are still seeing those prices and those houses being started. Then look at this, a lot of Feds also talking in the afternoon, causing market volatility. And I think they are all pointing towards we have to wait until most probably the final quarter of the year to really see cuts happening. And Friday, Waller saying the same. Really dangerous Friday because it was OPEC's options expirations for the month, and we were trying to push higher, but then I think metals came in and the market really sold off at the end of the day on Friday. But we are at a key level. We really need to see what's happening on Monday next week. But the sentiment this week was finally green, but it was quite mixed between the Fed talks, the metal surging, and the equities finally selling off at the end of Friday. Was a pretty bad taste for the final hours of the trading, but we are at a key spot that we are going to cover on the technical analysis later. Before moving there, I always like to check the probabilities on the interest rates. And as you can see, we are still pricing in holds until September. The first cut is coming in September, and most probably is going to be the only one in the year. This 36 in December probability for another rate cut, I think this is going to be missed. So everyone is watching this first cut between September and November. Also, on equity futures, I always like to check the open interest. And in this case, in a day in which we tried to go higher but then went lower, we basically liquidated longs. That's understandable. Options expirations were coming on Friday and ahead of the weekend. If we are not seeing big news next week, people will just take profits and close positions. Sooner rather than later, we are going to roll over to next contract on equities, on futures. So basically, this 7,000 was just long liquidation ahead of the weekend. And on the Nasdaq, we are also increasing. This is the most concerning part because when we are pushing down, adding open interest means that we are adding short sellers. So be careful with this. Nasdaq is at a key spot, closing on Friday. So we will need to see on Monday if we are holding levels or not. And to end the fundamental side of things, next week earnings is going to be everything about Nvidia on Wednesday. This is going to be key. Everyone will be watching Nvidia on Wednesday after the close, and this is the most important thing that is happening next week in terms of earnings. This is going to affect everything because Nvidia, it's AI, and AI is what is causing this surge in the market. So really pay attention to that. And without further ado, we are going to move into the technical analysis. This is the weekly chart on the Nasdaq. You can see we ended the week with 2% upside. That is pretty good. And we are right there. We did a new all-time highs, but when we do these kind of things in which 1, 2, 3, and 4 weeks straight, we are pushing all-time highs, we need to really see consolidation here in order to see continuation. This is patience. This is a weekly chart, a high time frame in which we really need to pay attention to this because big money is playing this time frame. If we go lower to the daily, we can see all these nuances in which this kind of resistance was happening there. I was expecting at some point a pullback because look at this. Then this first surge in May, then consolidation, and then the final push into all-time highs. I think the all-time highs was pretty much there since we started pushing here at last week. I was saying if we go from this node upside, we are going most probably to target these all-time highs. So basically, we are now not rejecting, but we tapped all-time highs and we are now trying to consolidate. There's a huge daily fair value gap here and a pivot point that I would like to hold at 18,500 more or less. With a big node in volume, I think that's what needs to hold the market. If we don't hold this and we start pushing basically lower and we go below this node and this zone of interest of 18,500, I think we will need to see the next level at around, let me check, this would be 18,280 or something like that. So the first thing that needs to happen is that buyers, investors to really recommit to this pullback. In the lower time frames, as you can see, we can analyze the week here. This was Monday, no news, Tuesday PPI, CPI on Wednesday, and then Thursday on Friday really pulled back. Let me just go to the 15-minute chart to really analyze the target in a lower time frames. This was Monday's price action, pretty straightforward, choppiness everywhere. And this was the first sign of bullish action. The PPI was really interesting on this deep buy, and then buyers squeezing higher into the close. A late spike was formed, and I was watching this pullback, but we never got the pullback down here. In my video on Wednesday, I also covered that because for the PPI, for the CPI in here, I was really expecting a really pullback down here in this zone to really jump into the market and ride it home higher. That never happened. I missed that trade. I took a couple of trades here, but on Thursday and Friday, all-time highs were so near here at less than 0.20% that obviously during overnight, we just took the all-time highs and we chopped during Thursdays and on Friday's price action. So we really need to see Wednesday, Thursday, and Friday to really understand what is happening. In order to do that, let me just go to the 1 hour. Not the 1 hour, sorry. Just go these 15 minutes, sorry. So we have basically, as always, in this big push, we have the fib control retracement since the low to the high of this push, and the 50% retracement comes in this green line. I always take the 50% retracement to see alignment with other of setups, and there's a lot of fair value gaps in the 15-minute, 13-minute, and 1 hour. You can see I have these since Wednesday. On Thursday, we never touched them. We were chopping and most probably just trending lower, a little bit of pullback. During the overnight, we tried to go higher, but we dumped where? Look at this, beautiful. We bounce off a zone of interest, very technical, and we basically drive through all the inverse and are leaving behind another 15-minute fair value gap. So this week needs to hold price action next week. And I would like to see in the lower time frames a bounce in this fair value gap to really see a move higher. I don't want this zone here not holding and we just start doing this kind of thing. I don't want this. This is going to be shorts, more probably piling in and buyers not interested. And that would be the level that I will be watching for next week. So really critical data, really critical level here on lower time frames, and on higher time frames, remember that we have the daily fair value gap in here. So obviously this is what needs to hold, and we don't want the market to continue lower below 18,500. That will be the setup for the entire week next week to really buy the Nasdaq into all-time highs. But in order to do that, we have to also pay attention to the rest of the Nasdaq components. And most probably Apple will need to hold this zone between 187 and 190. I would like Apple to continue building higher price. And remember that Apple earnings were not super high, but what is driving investors is the 110 billion buyback. That's going to be key. And we are also removing, not removing, but we are breaking this trend line to the upside. So maybe a retest on the lower part of the resistance and then move higher. Apple is going to be key next week, the same as Microsoft, which is barely, which is at 2% of all-time highs. There are a lot of stocks in the Nasdaq, big cap stocks, that are also in this setup. Microsoft is one of them. Tesla pushing, but basically it's just disconnected from the rest with its own things, with Elon Musk, with the new China agreement for the FSD. I mean, Tesla, it's apart from the rest, really disconnected. I don't really follow Tesla until basically up here at 210. I will be more interested to see what Tesla is doing, but Amazon is the one that I'm following for the consumer discretionary standpoint, and it's holding both 45 and 20 moving average on the daily, but it's just trying to find support somewhere. And it's quite tricky because in this range, we are basically a little bit higher than the mid range. So basically we are in the middle. And in the middle, we really need to see what is going to happen with Amazon. But again, another stock that is at 3% from all-time highs. Google doing new all-time highs. We have to adjust this, put the previous all-time highs, really see if we see continuation or perhaps a pullback like this. These kind of pullbacks after all-time highs beat are the thing that investors and swing traders need to see to really continue the move higher. Nvidia, as I said before, is going to report earnings on Wednesday after the close. Nvidia needs to hold this 924, and I think if Nvidia reports earnings on Wednesday in a good way, we might see a big surge towards 1000. Finally, Meta is in the middle of both 20 and 45. It's just trying to do its thing here. I think, let me just do one thing. Since all-time highs until here, exactly, we are, in terms of volume, we are at the point of control since all-time highs in the anchor volume profile. So this is a zone in which there's a lot of volume, a lot of battle in here. So this zone is going to be critical. Let's see if we break down or if we push out of this range towards 500 on Meta. So as you can see, apart from Tesla and Microsoft, Nvidia is going to be key. And overall, the Nasdaq components, the big tech, the Magnificent 7 are quite good, quite decent in strength, but we need to see more. And other markets that might be super interesting for next week is the dollar. The dollar got a big push down ahead of PPI, and on the CPI, another push down. That was quite a technical rejection. So we are now below the 20 moving average on the daily, rejecting this zone with a big candle. And look at this Friday. Friday was rejection after rejection after rejection. And as you can see, we gapped down, on Friday. We tried to push higher, but we rejected again from a key zone of resistance. So if dollar stills weakening, continues going down next week, this is going to provide stocks and equities with a nice push higher. But something concerning, we are now to start talking about the things that are warning us, the things that are concerning. Our yields are bouncing from the PPI and CPI, a big push higher, again retaking the 4.8 in the 2-year, and in the 10-year also bouncing from the 200 moving average. The 2-year, it's the most concerning one because, I mean, we just retraced a lot of this move lower. So be really careful because yields are not still dead. yields are still pushing higher, and that means that the narrative of higher for longer continues, and that is the fear of higher for longer inflation, sticky inflation going higher. Small caps were flat on Friday. We are still at these highs trying to hold somehow, but as I mentioned in the opening in this video, one of the things that really caught everyone's attention on Friday was metals. Metals were, look at this, 1.34 on the gold, 3.91 on copper, and 4.27 on the silver futures, and 6.50 on the silver spot. That's insane. Insane because look at gold. Gold, remember that it's a refugee for a lot of people's money, and it's certainly looking pretty bullish towards higher pricing and all-time highs of 2,500. Gold is inflationary. Piling into gold, piling into dollar, piling into metals will cause inflation to go higher because all these metals are affecting from construction to also chips and AI data centers. So look at copper. Copper is at levels not seen since March 2020. We just broke at the end of last year. Dr. Copper was showing some kind of strength in the recovery of the economy, but we have gone too far, I think. Look at this move on copper. That's insane. Because if we check since it broke, it's 28%. 28% since March. And Dr. Copper is saying the economy is booming. Yes, but these prices on copper that affects everything in the industrial and production, manufacturing, everything will cause inflation and prices to go higher. Silver, another metal that is pretty much used in AI and everything in production and industrials. I've never seen something like this. This candle of 4.27, I mean, this zone right here, it's coming from December 2020. It's insane. I mean, something is changing and it's not for the good. The silver price reached more than $30 per ounce. And look at this breakout. This was a 6.50% breakout. And if we put that into context on the weekly, I mean, we've not seen these prices since February 2013, more than 10 years ago. So pay attention to this because this is going to affect a lot of things and this is inflationary. These metals going higher, it's concerning. I have a metric here which certainly covers basically it's copper with gold, with silver on the spot and silver futures. These, I want to see the ratio with the equities, basically ES and the Nasdaq. So if we track these, it's basically what I had here. This tracks the ratio of metals with the equities. And look at this search. This search is 16% of push against the equities. This happened also when the pandemic in March 2022. This happened also on August 2020. This happened also in the spike of the Great Recession, the GFC. So pay attention to this because basically metals are saying higher prices for everything are here to stay. And this is quite concerning. I would like for you to pay attention to this, to follow this. If you trade these futures, that's okay. But I'm just saying to you, dollar needs to weaken, yields needs to go lower. And I think what happened at the end of the session on Friday on equities, even though we bounced, we need to see these levels hold, and let's see what happens with the metals, because metals might be causing these kind of things. If metals continue surging and we slowly grind higher, be really careful. We really need to see a cool down of these prices, because that's it's gold, copper, and silver, also platinum. A lot of these are being used to AI chips and to manufacture a lot of what is hyping these markets. So think twice about what is happening from a fundamental point of view. Obviously, follow price action. If we hold this fair value gap and start pushing higher, don't get me wrong, we can trade that. But pay attention to these metals and what are they doing, because I think outflows from the AI stocks, outflows from the Nasdaq, from the tech heavy sector to these kind of markets are actually happening. And we have to think about what is money doing, because if no buyers are here, then we must probably find weakness in the midterm. So that's my final remarks and your video to really review what I told you and do your own diligence, do your own analysis ahead of next week. And I think that's all from my side. As always, I put a lot of effort in these videos. Review them, do your own charts, spend time doing these kind of things, because that is going to be the key to really go ahead of the others in terms of trading. Having patience, having discipline, managing your risk, understanding the markets and what are they doing and why are they doing that, it's key for your success. So if you found this video useful, please give it a like, subscribe to the channel. I upload videos like this every Saturday for the weekly recap, and also every single trading day, Monday through Friday, for market recaps, market reviews, and market forecasts. So thank you everyone. Stay safe, have a nice weekend, and see you on Monday.